Okay, pay attention. Now, see, they may ask you question on a charitable institution in the form of a trust. So far, this has come in exam, educational institution. First, just to give you idea, I'll show you the question, how they will ask. Where is it gone? Yeah. Can you see? Question number 3. Mention the special points to be examined by the auditor in an audit of a charitable institution. Now this charitable institution, what is it doing? It's running hostel for students pursuing chartered accountancy course, and which charges only rupees 500 per month for boarding and lodging. How much your hostel is charging? 5,000? 6,000? 5,000? This is unfair, no? This is only 500 rupees it's charging. That means what? As an auditor, how will you do audit of this type of institution? This is one way of asking the question. Okay. I will tell you all the points, like what points you have to verify. So education institution, you can say important because it has come in exam. Okay, already. You may get question on religious or in the nature of trust also. They are also charitable only. Charitable trust, religious trust or religious institution. But first, before I start with anything to dictate the answer, I just want to tell you, what do you mean by charitable institution? No matter any type of question comes, what do you mean by it? See, first of all, charitable institutions can be private charitable institutions also, they can be public also. You will be writing an answer, but you don't know what is the crux of the case, so you listen first the concept. Charitable institution can be private charitable, public charitable. Maybe if you are saying that the fees are high, boarding and lodging, it means it can be a private trust, okay, because of which the fees are high. Normally charitable institution, remember, especially when it is a public charitable institution, they receive a lot of donations. So automatically from the donation money only they will conduct the activities of charitable institution, okay. And this what I have written here, charitable institutions are mostly formed on the concept of trust. Very important concept. In India, this concept is a very popular concept, the trust concept, okay. So many things, many charitable institution, religious institution, education institution, they are actually called as trust. The very big name given to, even Institute of Chartered Accountants of India is a trust only. Okay, it's a trust. So these charitable institutions, when they are formed, see, dictionary meaning of trust means having a faith or loyalty on someone. Okay, so in India, if I have a faith or loyalty, I can give him everything, the whole property, everything I can give. Okay, if I have a faith or loyalty on a person, like how does the concept works? In India, the trust concept works like this. This is my house, suppose. It is my villa. Mahavilla. And this is my ancestral property. The value in today's time is 5 crores. If I sell this property, I can realize anything which is 5 crores or more. Okay. So, but this villa is located in my village, not here. So I'm in city. I am having a practice of my own. I am a practicing CA. I don't have time to take care of this villa. It is my ancestral property. Okay. So my ancestors gave me this property and then they disappeared. So now what to do with this property? It's a good property, and I have nobody who I can trust upon. Very difficult. and I also have a 1-year-old son. Just for example. So, for example, I can have 10-year-old son also. Example. So, this son, he's still not in that stage to understand that, you know, how much wealth he has. See, ultimately my son has to get everything, okay? But then he's still not at that age to understand. He does not know what is villa, whose father, etc. He does not know all this. So he does not know all those things. So what to do now? Please let me complete. So what to do? Once I was walking on the road and I happened to meet one of my friends. Boyfriend. So I happened to meet one of my friends. So he was my school friend, you know, school. Right from school we were together. But then I cleared CA and he cleared BA, and then, you know, he did not do much in his life. So he was very upset with his life, you know, what to do. Suddenly we accidentally met each other. So while we met each other, what happened? I told him that, how are you? He said, I'm fine, but I'm doing nothing. I said, I am doing so many things, you know. So I told him that, do you want a job? I told him, do you want a job? He said, yes. So I told him, see, I have a property in my village. It's a big villa, but I have nobody to take care of that villa. So can you become the caretaker? He said, I am ready to do everything for you, okay? He was knowing exactly what I wanted. So see, I am explaining you what is this concept of charitable trust. So this person, he went, you know, I took him along, and then I explained him the whole story. This is how the villa is, and you have to take care. That means I formed a deed here with him. This deed is called as trust deed. Now remember, in India, whenever you form a deed like this, there are 3 parties in trust deed. I was the owner of the property, so I will be called as the owner. Sometimes the Trust Act calls owner as the author also. Author means owner. My son is supposed to get but he is still very small. He's a toddler, 1-year-old. Okay? No, 1 year. So he's a very small, you know, as of now he's not in that stage to understand things. So I will call him as my beneficiary. Okay, I will call him as my beneficiary. And there is the third person, this person, my friend, I will call him as the trustee. You know, in your college you go, in your school, in your hostel, in a temple, in a hospital, CA institute, all this is formed on this concept, trust deed. Okay, so in a trust deed there are how many parties? The owner, the beneficiary, and the trustee. Owner cannot take care of the property, and the trustee is a person who is a caretaker of the property. And ultimately these both are entering into trust deed for a beneficiary. That is a trust concept. Remember one thing, that in India, since I told you, we can have both type of trust. We can have a private trust, we can have a public trust. So mostly in case of public trust, lot of donations come from public only. Like suppose if the public trust is formed in the nature of a temple. Now you see Tirupati Balaji. That temple gets lots of donation. Actually, you know, you speaking with due respect to God, I'll tell you that the temple gets donations which may be more than 1,000 crores in 1 year. Everybody, oh, I want to become CA, 1,000 rupees you will. Okay. And then like you, there are so many people, everybody, and these are called as anonymous donations. No name is written on the currency note. Okay. So all the money which is accumulated, see, the trust concept says that you should utilize money for meeting the objects of the trust. Suppose if this villa is given to the trustee, what the trustee should do, you know? He should not only take care of the villa, but he should also try to earn some rental income out of this. He should let out the villa, he should earn rent, and then he should pass on that rent to me, I am the owner, or to my beneficiary. But if the trustee becomes fraudulent, okay, then wrong things can start happening in the trust also. Actually speaking, you know, the trust concept says that the trustee is supposed to be the deemed owner of the property. I am the owner, he is my deemed owner. And when I'm saying deemed owner, it means it is like his property. I don't know whether you have studied Contract Act. In CPT you would have studied. In Contract Act there's a concept of principal and agency. In case if the principal gives his property or goods to the agent, the job of the agent is to sell the goods for principal. He does not become the owner, he is still an agent only. But in a trust, what happens? The owner gives the property to the trustee and he becomes the owner. This is the difference between agency and trust. Trustee is not my agent. Please don't take him as my agent. Okay? He's just like a owner only, because I have lot of faith on him. That is why I have appointed him as a trustee. So if the trustee betrays the trust, or if he betrays me, then the Trust Act says that in that event, personal assets of trustee can also be attached. But the problem is that the trustee should have personal assets first to get attached. Okay? So that is one big issue involved in this. So personal assets should be attached. So you know what these trustees do many a times. Why I gave you example of Tirupati Balaji? Because there what happens, the trustees who get a lot of donations, they have to actually use that donation money for meeting the trust object. If you study the Income Tax Act, there is one section number 11, income tax. Okay? Section number 11 is there, CA final section, not in IPCC. It is a exemption given to the trust. It is a trust exemption. So income tax also contains provisions on this trust. It's a very versatile concept. This section 11 says that suppose if a trust receives 100 rupees, okay, then out of 100 rupees, at least 85 rupees, minimum, I am saying not maximum, minimum 85 rupees should be used for meeting the objects of the trust. Then only this 100 rupees will be exempted. So if you want that this entire 100 rupees should not be charged to any taxation, any tax liability, then you have to at least use 185 rupees out of this 100 rupees for meeting the object of the trust. So if you are not able to meet the objects of the trust, then sir, if I met only 81 rupees out of this, then the entire 100 rupees you have to pay tax, 30% tax rate, high tax bracket. Okay? So that means what? Some trust, if they use the 95 rupees, 99 rupees, then they don't have to pay any tax on it. So you know what these trustees do in Tirupati Balaji temple? They start buying personal assets. That is the only option left with them. Where will you spend 1000 crore rupees? Tell me. In 1 year you get 1000 crore rupees. Where will you spend? You do land acquisition, you do property acquisition, you create temple. After that also 500 crores are still left. 50% only you utilized. 50% is still left. So every trustee will start buying BMW car, Mercedes Benz. They will have a duplex house. Okay? And they will show this as an expenditure of the trust. As a CA, your job, this is all unfair means. That means you are not only cheating the public, because it's a public trust. Public has faith on God, so they give you donation. They don't have faith on trustee. They have faith on God, so they give donation. So as an auditor, you have to find out whether the donation is used for the purpose of the trust or not. Okay, and it happens in all the temples in India. I'm telling you, in all the temples. The big problem with the Trust Act is that it is not that foolproof. It's not that powerful. Suppose if this type of activity happens, the only person who can resolve this type of issue is the auditor. Now if the auditor is also bribed, and these trustees are very good in bribing the auditors also. You want one BMW? Auditor says yes. Okay. Take one BMW and write true and fair view. Okay. So if you become the auditor of a trust, you are the most richest auditor. Because the trust definitely is going, every year they have 1000 crore rupees accumulation where they will utilize it. So they start buying personal asset. Auditor has to report this personal asset point. Do you know that and what they will say, this is the car of the trust. That means when there is a function or something, you know, we will use this car in the, you will use Mercedes Benz in a function. Such a nice car, you know. So this personal asset, house property, they start buying it. You have to report these cases. Ultimately, you know what these trustees do? Their objective is to evade the tax. They don't want to pay this 30% tax. Imagine on 1000 crores, if you give 300 crores to government, it's a loss for the trust. How much? This much money government will take away if you don't utilize 85%. So they do any possible effort to make sure that this 85% at least gets utilized for meeting the objects of the trust. Auditor of a trust has to find out all these points, fraud, etc. The question which I showed you just now, that boarding and lodging CA students, that's a very easy way of asking the question. If I wanted to make a paper difficult, I can ask all this point, and I'm 100% sure no student is going to write this. You know, at the end of the answer, the CA Institute suggested answer, what I am telling you, only one point they have written. Rest all points they will say, you know, what will you verify expense, verify investment, verify there are capital expenditure, library, student should be given library facility, verify that, check provision for other. This is very simple point. Any student can write this point. They have just written one good point in the whole answer, that whether the institution is eligible for any income tax. Which section contains the provision? Okay, and suppose if the exemption is there, whether the conditions for meeting exemption are fulfilled or not, because you cannot just take exemption. That 85% condition has to be fulfilled. Nobody is going to write that. So we will incorporate all those points also in our answer. Have you understood or not? Shall I give you a note on all this? Yeah, please write down. Audit of a charitable trust. Write down first point. A charitable institution can be formed. Charitable institution can be formed in the nature of trust or educational institution or religious institution or religious institution. Full stop. Next point. Trust means having faith on a person, and in India trust can be a private trust, public trust, and sometimes public as well as private trust, public cum private, and sometimes public cum private trust. Full stop. Next point. There are three parties in a trust, who have to enter into a trust deed, there are three parties in a trust who have to enter into a trust deed and get it registered. Full stop. The trust deed can be registered. Continue. The trust deed can be registered with the CIT, Commissioner of Income Tax. Every jurisdiction has one commissioner, okay? So whichever is the nearest commissioner, you can get it registered with the Commissioner of Income Tax. Full stop. There are three parties in a trust, that is the owner, the beneficiary, and the trustee. and the trustee. Full stop. Next point. Trustee is responsible. Trustee is responsible for preparing and maintaining. Trustee is responsible for preparing and maintaining the books of accounts of a trust. Preparing and maintaining the books of accounts of a trust. Full stop. Full stop. He will appoint auditors. He will appoint auditors and will also fix their remuneration. And will also fix their remuneration. Next point. It is the responsibility of the trustee. It is the responsibility of the trustee to use the trust property, only for the objects of the trust. Use the trust property only for the objects of the trust. Only for the objects of the trust. Full stop. Under section 11, of the Income Tax Act, if at least 85% of the gross receipts of the trust are utilized for meeting the trust object, then the entire receipt is exempted. Full stop. An auditor should verify, continue there only. An auditor should verify whether the condition for claiming income tax exemption, has been fulfilled by the trust or not. Has been fulfilled by the trust or not. Full stop. Next point. In case of an educational trust, auditor should verify the donations received, very important point. Auditor should verify the donations, underline donations received for the benefit of students. Full stop. Next point. He should check day-to-day expenditure Next point. He should check day-to-day expenditure incurred along with necessary vouchers. He should check day-to-day expenditure incurred along with necessary vouchers supporting for the same. Supporting means the bills, invoices, etc. Supporting for the same, like invoices, comma, registers, and copies of contracts. Next point. If there are surplus funds available, next point, if there are surplus funds available after meeting day-to-day administrative cost, then these funds can be utilized for making investments. Please underline this word, making investments. Full stop. An auditor should verify, continue there only. An auditor should verify the investment certificates. Auditors should verify the investment certificates and ensure that they are in the name of institution. Next point. For an educational institution, the students should be provided with library facilities. And an auditor should see library facilities, and an auditor should see that proper library register is maintained. Next point. An auditor should verify capital expenditures. And he should physically see the furniture. Comma, glass cutlery, all spellings are on the board, glass cutlery, comma, kitchen utensils, linen, etc., linen, etc., and ensure that they are adequately depreciated. And ensure that they are adequately depreciated. And one last point. For additional facilities, like computer facilities, and mess charges. What are mess charges? Food, eating expenses. And mess charges, the students should be charged separately. The students should be charged separately. That's it. This is what you have to write. 5 to 6 marks question can come on this.